Hi there. This is the second video for the QQE indicator. I've done one already, and this one is just more of the same because I really want you to understand what I'm looking at as far as the QQE. It's not that complicated once you understand it, but sometimes getting the gist of it is tough to begin with. So I'm going to go through a second video. This is a different pair, the Euro USD. This is the 1 hour chart. And we're going to go through all the same stuff. Entry signals, secondary entry signals, and stale entry signals. Okay, first of all, we're looking for the correct organization of these two lines. So when we're going long, when we want to buy, the RSI has to be over the signal line. This blue line is the RSI line. It's the main line. This dotted red line is the signal line. And when we want to go long, the RSI has to be over the signal line. Same sort of thing as a stochastic or a MACD. We are looking for the two lines to be in the proper order. When we want to go short, when we want to sell, the signal line has to be over the RSI line. The RSI needs to be under the signal line. So this indicator tends to cross back and forth, giving us sell signals and buy signals, and they need to be in the proper zone. When we get a signal to go short, like this one here, the indicators come from above and they drop into the short zone, the area under the 50 line. So this is our signal to go short. We get the RSI line under the signal line and it drops below the 50 line. This is a nice clean signal to go short. Then we get the flip. Now we're looking for a signal to go long, and we get that right here. The RSI line is above the signal line, and it crosses above this 50 line. That's a nice, clean signal to go long. But then, as the price moves, we get a cross back below the 50 line. This is not a signal to go short because the signal line is in the wrong place. We have got the signal line under the RSI line, which is strictly a buy scenario. But then the RSI line pops out again above the 50, which is a re-entry signal. This is a secondary entry signal to go long for the QQE. Now we get here a nice cross below the 50 line as the signal line crosses above. Let me see this happened here. So this all happens at the same time. We get a nice cross below, the signal line crosses above. This is a good entry to go short. And then here we have the same thing happening to go long. We get a cross above the signal line and a cross above the 50 line. Now what I want to look at again is this right here. This is what's called a stale entry signal. This happens generally at the end of a move. Now we've got everything above the 50 line. We get the cross below this short scenario, the short signal, but because it doesn't cross below, we don't take any short trades. And then we get this cross back above. Now because it doesn't come from underneath to go above, everything is above when this happens. The RSI line and the signal line are both above the 50 line. This is a stale signal. Generally, we like it when it goes from one zone to the other. So we've got here, this sell signal here, everything comes from above and crosses below. And here, we've got stuff coming from below crossing above. And again, the RSI line crosses below from above, and then it crosses above from below. But here, this stale signal, everything is above. Now I'm going to get my hairline here, and we're going to look at when this signal is generated right here. You can see it happens right up here. This is the very end of the move. We couldn't have been any higher. Like this was the end of it. It didn't go any higher than this. So if we had entered a trade here, this is in the absolute worst place to have entered a trade. We get the stale signal at the end of the movement. Now let's see if I can find something else here. Here we get a nice entry signal to go short. It comes from above, crosses below the 50 line, and the signal line crosses above. Then we get a cross back above the 50 line, which is a no trade because the signal line is in the wrong place. This whole scenario is looking for short sell trades. And then we get a cross back below the 50 line. This is a good re-entry. This is a secondary QQE short signal, which coincides with our arrow and a close below the 5. And this would have been a nice trade. Here we could consider this a stale signal. However, the RSI line did cross above the 50 line and then back below. So it is coming from above the 50 line. So this is a signal that we could have taken. This is a good signal. It is somewhat stale though because most of this action happened below the 50 line, but because it did cross a little bit above and come back down, this is okay. Here is a perfect example of a stale short signal. We get the initial short signal here where it's below the signal line, then crosses below the 50, which is a good short signal. The trade works out famously. It comes out really nice. Then we get the RSI line crossing above the signal line. This is not a long trade signal because we're not crossing above the 50. But what happens is we get a cross back below the signal line. This, again, is a short signal, but it didn't come from above the 50 line. All the action happened below the 50 line. Now let's take a look at this. I'll get my crosshairs again. Look at that. That would have happened at the very end of this nice long run. So if we had entered a trade there, this also would have been the worst possible place to enter a trade. These stale signals are not very good. There is an advanced method, and I show that in the advanced videos, how to shorten this signal line to get a little bit left, a little bit of movement out of those stale signals. But for now, this is system, and the stale signals are evil. Here's some more. This is a stale signal. We get this one here crosses below, everything is below, but it comes from above the 50 line. So this could be taken. We could take this. Now this one here, however, all of this action happened below the 50 line. We had a cross back up and then a cross below. This is a very stale signal. Let's take a look at the crosshairs again. Grab my crosshairs. We'll see the signal was right here, which was on this candle here. Now there was a teeny bit of movement downwards, but nothing to write home about. You probably would have lost on this one. So yeah, this was a bad signal to take. This initial one up here was right in this area. This is good. Nice long run. But then we get that re-entry signal. Bad. We don't take those. Let's look for another one. Well, here we get a re-entry. This is the secondary entry signal to go short. Here again, we get an initial short trade. It comes from above. Then it goes back above the 50, which we do not take as a long trade because the signal line's in the wrong place. And then we get a nice secondary signal. This could be a place where you add to your position or enter the trade initially if you had missed the first one. Here is a stale signal to go along again. This is, all the action is above the 50 line. We get this move below the signal and then back above the signal. Take a look at this again with the crosshairs. This was on that this little spinning top right here. This again was the very top of the move. So we don't take that one. Let's get rid of that. Again, we've got another stale signal right here to go short. We get the initial one was here, and it looked like it made a nice long move down. We get a second signal to go short, but everything is below the 50 line. So again, with my crosshairs. Now there was a little room on this. You could have made a little bit, but there wasn't very much left. Not a lot of steam left on this one. You could have made a few pips, but to me, it's not worth the effort. It's very unlikely that it works out. All right, let's take a look again, some more. Here we get a nice entry to go short. We get everything coming from above, crossing down below. The signal line and the RSI are in the right order. Here we get a long signal. Everything is from below, crossing above, crosses back below. We don't trade short, but we could re-enter a long position here. Same thing here. We get a short signal here, get a long signal here. All the RSI and signal line are in the right order. This here is a stale trade to go long. I'm going to take a look at this. Where does that go? Now there again was a little bit of room left to go on this, but not very much. Not worth the risk as far as I'm concerned. We did though get a really nice entry here to go long, and then a nice re-entry, a secondary signal here as it dropped below and then popped back up. Look at that run. Now what a beautiful run that was. And what do we have? We have any more? Here's another stale signal. We get the short and then back into the long, and everything happens above the 50. This one also had a little bit of room, not very much though. This was the top of it. Just a handful of pips on that one. So that wasn't worth the effort. You wouldn't have stayed in the trade long enough to capitalize on that. You wouldn't have closed it soon enough. So that wasn't worth the effort. It wasn't worth the risk. Again, another stale trade here. It looks like this one worked out a little bit, but as you see though, these stale trades happen towards the very end of the moves. So we're looking for a trade to come from above to below. All the signals, I mean, to cross below from above for a short trade, and to cross from below to above for a long trade. And the signal line must be over the RSI line for a short trade. The RSI line must be under the signal line. And for a long trade, we're looking for the RSI line to be over the signal line. Just imagine the flip-flop of a stochastic or a MACD two-line indicator. That is how these ones work. Okay, I think that's it for this video. I will see you in another video.